It's a new week. Good morning and welcome to Business Morning. It's 55 minutes of current and relevant business conversation. That's what we're going to do here. I'm Ini John Mekwa. Well, let's get right into it this Monday morning. And we begin with grain. Story from Grain shows that Chicago corn slid for a fifth consecutive session on Monday, while soybeans dropped to a two-week low as expectations of milder weather in the U.S. Midwest reduce concerns over supplies. Wheat slid almost 2%, but was on track for a second month of gains, with worries over Black Sea supplies driving prices higher in recent weeks. The most active corn contract on the Chicago Board of Trade was down 2.1% at $5.19 for a bushel, and soybeans gave up 1.8% to $13.57 for half a bushel after declining their latest. And in July, corn has risen around 5%, soybeans up 1%, and wheat climbed 6%. Forecast of cooler weather in the United States Midwest are driving prices lower, but market expect the U.S. Department of Agriculture, that's the USDA, to lower weekly condition ratings for corn and soybean crops in a report. Heading into August, the key period of development for the U.S. soybean crops, much of the country is expected to get a reprieve from significantly above normal temperatures. Edible oil. Now, Malaysian palm oil futures fell on Monday, extending declines in the early trade, dragged by weaker vegetable oils in the Dalian Commodity Exchange. The benchmark palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange lost 48 ringgits, that's about 1.19%, to 3,987 ringgits, translates to about $871 a metric ton by midday break. Indonesia's palm oil exports, including refined products, stood at 2.23 million tons in May, according to data from the Indonesian Palm Oil Association. Malaysia's palm oil export during July, the 1st to the 20th, rose 10.1% from the month before, and that's according to a cargo surveyor Intertech. Dalian's most active soy oil contract fell 2%, while its palm oil contract lost 2.07%. Soy oil prices on the Chicago Board of Trade were up 0.56%, and Dalian's most active soy oil fell. Palm oil is affected by price movements in related oils as they compete for a share in the global vegetables oil market. Crude oil is next. Now, prices edged low on Monday, but we're hovering near three-month highs, set to post their biggest monthly gains in over a year on expectations that Saudi Arabia would extend voluntary output cuts into September and tighten global supply. Brent crude futures were down 45 cents to $84.54 a barrel, while West Texas Intermediate crude futures was at $80.25 a barrel, and that's down 33 cents. The September Brent contract will expire later on today. The more active October contract was at $84.23 a barrel, and that's down 18 cents. Brent and WTI settled on Friday at their highest level since April, gaining for a fifth straight week as tightening oil supplies globally and expectations of an end to U.S. interest rate hikes supported prices. Both are on track to close July with their biggest monthly gains since January 2022. Meanwhile, Saudi Arabia is expected to extend a voluntary oil output cut of 1 million barrels per day for another 1 month to include September. Goldman Sachs estimated that global oil demand rose to a record 102.8 million barrels per day in July, and it's reversed up 2023 demand by about 550,000 barrels a day on stronger economic growth estimates in India and the United States, and this offset a downgrade for China's consumption. Let's come home back here in Nigeria. The Nigerian Electricity Regulatory Commission, NERC, has affirmed that all customers have the right to a refund when overbilled by their respective electricity distribution companies, DISCOs. The Commission made this known in a statement on its website, as well as its Twitter handle. Well, this comes amid numerous complaints of electricity consumers across the country over outrageous bills sent to them by distribution companies. Some of the rights of the electricity consumers outlined by the power sector regulator include that all customers have the right to transparent electricity billing. All customers have the right to properly installed and functional meter. It adds that the customer has the right to contest any electricity bill and that any unmetered customer disputing their estimated bill has the right not to pay. Sounds too good to be true. But let's find out how realistic this is with Dr. Shitu Shaib. He is the Deputy General Manager and Head Consumer Affairs Division of the Nigerian Electricity Regulatory Commission. Eric joins us from our Abuja studio. Well, it's good to see you, Doctor. Thank you for your time this morning. Dr. Shaib, can you hear me? Okay.
Good to see you too.
Great.
Nigerians.
So
I can hear you.
Okay, awesome. So Nigerians, I think they'll be happy to have you this morning because we have some very interesting things you have said here on your website, so coming from NERC. The first is that consumers have the right to request for refund when overbilled. But let's start from the top. How do you know when you're overbilled?
Well, basically, first and foremost, you have an average consumption of electricity if you are metered, which tells you your meter reading, and then, of course, you go pay for your bills if you are a postpaid customer. That is, if you have a meter that has bills being given to you. But if you are a prepaid customer, of course, you don't have issues related to being overbilled. But if you are a postpaid customer and you receive a bill that speaks outside the readings of the monthly consumption that you have, you can as well request and complain. And of course, you would be there will be some reconciliation. On the other hand, if you are an estimated customer, because I guess this issue really is for estimated customers, what the Commission has done is it has put in place a mechanism through which you know exactly what your estimate would be in a given period within a given cluster, and we call it the capped estimation. We capped the maximum a customer can be billed within a given period, within a cluster, to a particular amount. And if you are billed above that, of course, you have every right to request for reconciliation. And if the reconciliation is seen as you truly are overbilled, you will definitely get a refund. For those who are surcharged above what your normal average consumption of a postpaid bill, if you are a metered customer, that is the difference between your previous reading and your current reading, you can always contest that through complaint to the customer complaints unit of the distribution company, and it's your right to get refund.
What's the process of contesting a bill?
Sorry, the process of contesting a bill is what you do is you write. It's advisable that you don't just sit down complaining at home, or you write or you send a mail to the customer complaints unit of the distribution company, and it is their obligation to respond to you and give you a reason for the billings that they have given to you. And if you are not satisfied, of course, the Commission has put in place a redress mechanism that gives you the opportunity to escalate such non-redressal of your complaint to what we call the forum office, which is situated in all of the capitals, state capitals, or the headquarters of the various distribution companies. That is, it's located within all the Nigerian state capitals, that is 36 states. Presently, we have 31 forum offices. Of course, we're trying to get one or two to Bayelsa, Ekiti, and one other venue. Apart from that, we have the forum offices spread around the entire country. And when you escalate that, of course, the forum office would look into your issue and, of course, request the distribution company to reconcile, and you get refunded. And the refunds, of course, come in the form of credit. They don't come in the form of cash. So it is your right to get refunds if you are contesting any kind of overbilling on your consumption for electricity in any particular given time.
I wonder what's the average time frame for this contesting until you get to the end of that process on the average?
Well, basically, it's a billing period, because if there is an issue with your bill, it has to go within a billing period, and a billing period is usually 1 month. So if within 30 days after you've complained, it is not reflected in the next bill, of course, you can escalate to, like we said, the forum office, which is the commission. Of course, the commission itself is always available to look into the issues that pertain to customers. And we have had success stories in getting refunds to customers who have stayed the time and taken their time to contest. And what we encourage customers is not to just throw it out and say, okay, no, nothing can happen. Definitely, you will get your refund if you contest any overbilling. But of course, it has to be reconciled and the accurate bill for either using your metered consumption or at worst best case scenario the capping for your given locality. And what our rules, regulation has stated is that if there is any contestation in terms of the refund, or if your meter gets maybe spoiled or it gets damaged, what could happen is that they will estimate you, but you have to be estimated based on your previous consumption, an average of your previous consumption, or the capping estimate that is prevalent at that particular time, of course, whichever is lower. And this, of course, is meant to encourage distribution companies to quickly replace your meters so that you can be billed based on actual consumption from your meters.
All right, Dr. Shaib, just before we let you go, now this seems like an unending conversation because in that statement you also said that all consumers have the right to a properly installed and functional meter. We know that this right has been breached so many times. Even in the days of prepaid meters, a lot of people request for it, pay for it, wait through the process. So we see this right being breached a whole lot of times. What is the general approach to, if you want a prepaid meter, we are told to hold on or you can't reach and things like that? Because that means your right is being breached. You do not have a properly installed meter.
Yes, we know. Presently, what we have is a scenario whereby right from pre-privatization, we've had a metering gap of more than 50%, which the Commission has put in place quite a number of initiatives to close. However, we're still where we are. But presently, there is a regulation, which is the Meter Asset Providers Regulation and the National Mass Metering Program Regulation, which gives you the opportunity of getting metered through many options. The first, of course, being the Meter Asset Providers Regulation, whereby you go make some payments for meters that will be refunded to you, and within 10 days you should get metered. If the period of 10 days gets passed, you are entitled to some form of compensation again from the distribution company. Although what normally happens is that if a customer complains, the commission, of course, would ensure that whichever the distribution company is or the meter asset provider is that has created this delay gets sanctioned. So the average days, if you're going through the meter asset provider's option of getting metered, which means that you pay some money that will be refunded in credit over time, is 10 working days. However, there are other options open to the distribution company to meter you, which is a self-financing joint ventures, which of course the Commission is encouraging and pushing the distribution companies to ensure they implement. So those are the options that we have. We know the metering issue. The federal government itself has, came in and, introduced the National Mass Metering Program, and we had 1 million meters that were installed in various Nigeria's, the 11 discos presently. And of course, we know that given the metering gap, 1 million meters really just went in without some seeming impact, but definitely there's a lot of, interesting initiatives by the Commission to ensure that meters get to Nigerians as soon as possible. And the discourse are definitely working towards ensuring that all Nigerians get metered within the shortest possible time. All
right, thank you so much, Dr. Shaib, for your time. Those rights, very important. The knowledge, obviously very important for it to be pursued. Thanks, and we wish you the best. More meters, more metered customers in Nigeria.
Thank you very much. I appreciate it. Thank you.
All right, now let's take a break. When we come back, still staying on electricity. And now ICANN is wading in. What do they have to say? Find out after the break here on Business Morning. Good morning. You're still watching Business Morning here on Channels Television, and we're still discussing electricity now. ICANN has waded in. Remember the issue of electricity tariff hike, which of course we saw the federal government reacting to say it should be put on hold because it seems Nigerians are receiving a lot of economic punches from different sides. Well, let's see what ICANN sees in this. That's the Institute of Chartered Accountants of Nigeria. That's ICANN. What they see on this. We have the president here, Dr. Innocent Okosa, joins us in the studio. Dr. Okosa, thank you so much for your time this morning.
Thank you. Thank you for having me.
So one would not normally expect accountants, to go public and share their perspective on electricity, even though I do know, of course, as a Nigerian, as a resident in Nigeria, everybody's feeling it. But how much impact has this had to motivate you to go public and share a statement on the issue of electricity rate hike?
Yeah, so in ICANN, we advocate for good accountability and transparency in governance, and that trickles down to the citizens. So anything that affects the citizens, we're interested as a professional body. So that's what motivated us, because we have supported some of the policies of this government since they came on board. And we're also looking at the impact of some of these policies on the citizens, because governance at the end of the day should result in better life for the citizens. And we have this public interest mandate in the Institute to always go for that which favors the general masses.
So in this case, the discourse are saying that they really need this hike because, it's no news. We all feel it. Inflation is everywhere. They also have higher operating costs. In fact, some electricity companies or offices, PHCN, they do not have electricity there, because of some of these operating costs. So they are also defending their stance that apart from the fact that MITO, that's the minimum year tariff hike that they're supposed to have, things have really changed and they really need this to cover operating costs.
Yes, we agree with them to some extent in some of those reasons that they've given why they want to increase the tariff. But if you look at some of those reasons, you wonder whether this can actually be attributed to the action of the consumers. For instance, one of the reasons given is that government agencies are not paying electricity bills, that cannot be traced to the citizens. And do we not have a solution to that? If government agencies are not paying, is it not a question of us approaching these government agencies? And it's government, it's not the citizens. So if there are those faults that arises from, say, the citizens are not paying, they are dodging, they are tapping light, then we can blame that on the citizens. But some of those ones that are not attributable to the citizens, we should be able to distinguish that. So that's our position on that.
So for you now, what is the short-term solution? And then we can talk at least of the medium-term solution on all of this. I know you talked about making government agencies pay, but you know, who will make them pay? That's a big question that will come up. But what do you see as a low-hanging fruit? And then we can also look at the medium solution that can be implemented. Right.
So what we've suggested in our paper is that they should defer this hike in tariff. It should be suspended in the short term. And if they wanted a solution or what could cushion the effect of whatever cost they're incurring, our suggestion is that it should come in form of tax incentive by the government. So if government could give tax breaks to the discos in form of production that helps them in their distribution, then that is what we are suggesting for now as the immediate solution to the increase in the hike. Because you know what we're saying is that, as we're saying, the discos are feeling what is happening in the economy, the macroeconomic variables. The citizens are even feeling more. So by hiking this tariff, we are going to compound the problem of the citizens. And that's what we're saying can be avoided, because there are ways this can be avoided at the moment.
And then the issue of government agencies not paying, how can we solve that? He's getting a police to arrest himself.
Exactly. Why don't they cut off their light? What if the citizens don't pay? What do they do to them? They cut off citizens' light. If they cut off the light of those agents, they are buildings, is it not? They operate from offices. If they cut off from their offices, will they not pay? Or will they not find immediate solution? How do they deal with the citizens that don't pay? Are they different?
Some citizens beat up PHCN officials. I wonder what the government agencies, some of them have police guarding. I wonder what they would do, you know. So it's a very dicey situation for electricity providers, especially the discos who are at the tail end of it. Even though, of course, we do have some other technical issues like the gas, you know, supply that they need and all of those, and all of that also compound some of the problems that we do have in the sector.
Yeah, so I agree with you. I share their experience in terms of the difficulties they are facing, but I think that should not be transferred to the masses because of what they are facing now. We all are experiencing removal of fuel subsidy, unification of exchange rate, and the suffering. You see people trekking. So they're trekking to work. So do we now want a situation where they get to the house, they cannot afford electricity? You know Fela's song. You know, so the citizens have seen it the other day, like, let the masses breathe. I think we have to allow them to breathe, because this electricity tariff will go a long way suffocating the people. So they get to the house.
A little bit of air that's remaining for the poor.
Exactly. You know, so Fela said you get to the house, light no day, water no day, and
all right, Dr. Kosa, it's not every day we have the president of ICANN join us. So let me just use this opportunity to get your view of, you know, we've had a lot of activity in the economic since President Bola Tinubu took over office, policy, the FX policy, the subsidy, which is the biggest. Now we have the threats from Labour, you know, of a walkout by Wednesday if something is not done. We've seen the president attempt some palliatives, like the 8,000 naira, which he had to scrap, I think, after listening to, you know, Where are we, and how can we best handle this situation? That's the president, got a lot of applause when he talked about unification, removed the subsidy. But, I mean, about 2 months later or so, no palliatives. Now we see states trying to give some, monthly stipends to people and all of that. What are we missing? Why are we here? And now we're talking of a strike, which will shut down the whole economy.
Yeah, so, when the first subsidy was removed, the masses were looking at it that the corruption in that sector is going to be stopped, and then there's going to be huge savings that can be plowed back into the economy and then alleviate the suffering of the masses. That has not happened. Rather, what we saw is an attempt to borrow 800 million to distribute 8,000 to the citizens. And if you look at the astronomical rise in prices compared to what 8,000 additional would do to the income of the citizens, it's like a joke. And that is why people, on the unification of the exchange, we applauded it, thinking that when the exchange rate is floated, then demand and supply will bring it down. People were not looking at unification of exchange that it will be going up. But ever since the exchange rate has been unified and floated, we have seen continuous rise in the price of dollar. And so people are now beginning to ask the question, hang on, by unifying this exchange rate, what is the implication? Where is the money going to come from? Will that lead to increased production and export that will generate foreign exchange? Have our oil production where we get foreign exchange, has it improved? Has it increased? So where is this foreign exchange inflow that will bring down the price? Because, this is about the forces of demand and supply. And if you don't have supply, what's going to happen? The price keeps going up and up. So that's the realities that is beginning to down on us. And then people are beginning to take a second look at those bold policies and see that.
What should the president be doing now in the face of all of this? It's complicated, if I would say. So, for it's
instance,
never easy to be the president of the Federal Republic of Nigeria, but he asked for the job.
Exactly. So I believe he's going to do the job anyway. But let's look at that first subsidy removal. Our thinking is that there should be measures in place. Okay, now one thing in that oil industry is transparency and accountability, which we have not actually come to see. There are many questions that people are asking. How much does it cost to import a liter of fuel? Do we know that? We have oil in Nigeria. How much does it cost to refine one, assuming we're to refine internally? We have all these modular refineries, the ones that Air Force is destroying or Navy are destroying. Can we not make them, legalize them if they are illegal? And why should we be producing oil in Nigeria and importing fuel? Why can't the refineries work? We have refineries where you have many employees earning salary and they refine no liter of fuel. And everything has to be imported. So it doesn't need rocket science for us to know that something is wrong in that. So it is not removing the fuel subsidy that is the issue, but it is making the oil industry work. We have the crude. It's not as if to say we don't have the crude.
We have the brains.
We have the brains in this country. So
it's, as you said, a complicated one. But I guess it's up to the president to uncomplicate it. Exactly. Because these issues were there when he was campaigning, and he agreed to do the job and promised that he will make Nigeria better. Renewed hope. So we hope that renewed hope is not dashed.
So we still believe that it's going to work. And
okay, all right. Perhaps it's too soon. After it's just May 29.
Exactly.
Thank you so much for your time this morning, Dr. Innocent Okwuosa, the president of Institute of Chartered Accountants of Nigeria.
Thank you.
Thank you for your time.
All right, thank you.
All right, now we move to another issue, and that is we saw the vice president join I think about 49 countries. A representative were in St. Petersburg meeting with the president of Russia, President Vladimir Putin, that's of Ukraine. And President Putin has said that his country will offer preferential loans to enable African companies buy industrial goods from the European country and enjoy after-sales services. He also said that his government was devising a leasing mechanism tailored for Africa, and that Russian Agency for Exports, Credit and Investment Insurance would provide insurance for the planned preferential loans. Russia has also promised to look into a visa waiver for African countries. We've also heard of free grain promise, a whole lot of promises now. But just as I said, in Russia invasion with Olumide Macaulay earlier, when something seems to be too good, you really need to look at the fine print before you delve into it. Let's have Professor Akpan Eko, a professor of economics and public policy at the University of Uyo, Akwa Ibom, so to help us look at the fine print of this. It sounds too good to be true for me, but I don't know. He's a professor. He will see what I cannot see. Prof, good morning, sir.
Good morning. Thank you for having me.
Yeah, we have a lot of promises from Russia, but, you know, when it comes to President Putin, I believe we should look very well. So, free grain, write-off of debts, visa waiver. This is a whole lot to promise Africans. I wonder what Russia has to gain in this.
Thank you very much. I think it's, I don't know what word to use, rather embarrassing each time African leaders go to these countries like the recent Africa-Russia summit. They had a first summit. We don't know the outcome. This one, I think Russia is trying to save face. You know, because of the Ukraine-Russian war. If you can recollect, some Africans went to Russia to try to seek peace. And in my view, it just snubbed them. And now in this summit, it's promising evidence here. As you said, it's too good to be true. We have to be very careful. If they want to help Africa, they should not have backed out of the grain deal, where they've blocked the passage in the Black Sea. So I think this has to be examined properly. When they put us on the table, when you look at it, if you look at the Russian loan to Africa or the debt, it's not much. So I think that it's just an attempt to try to save face or win some partners, since Europe and America are supporting Ukraine, the war, and they just want to save face. So I think Africa should be very, very careful. And again, what's rather embarrassing is that each time these countries like Russia call African countries, we just go there capping on as if we are going to beg. The last summit, I think 47 or 49 countries attended, this time 17. Is reducing, but in terms of delegation, there was a substantial number. So I think we shouldn't take those so-called goodies seriously, because it's just an attempt to win the support of Africa. Right now, I think, if I can recollect, only South Africa is supporting Russia openly in the Ukraine-Russian war. And don't forget that Russia itself needs more bases in Africa, so we have to be very, very careful. So for me, I don't take the so-called goodies from Russia. Remember, this is not the old Soviet Union, where we could say that, oh, there were two blocks fighting, and so since the old Soviet Union was backing our liberation movements at that time, we should now have sympathy for the non-Russia. So I think we need to be extremely careful. I think, taking it to a pinch of salt, that these goodies are not really what they look like. And I hope each country will examine it properly. And the other issue is that Africa, at least the AU itself, they should, as a bloc, examine what they really want from Russia. Each time they call them, they go, each country goes and it's like maybe on scholarship, but that's not enough reason for us just to completely dive into what Russia is trying to offer. We have to examine it carefully. And again, in my view, this is also an opportunity for African countries, especially the ones who are agrarian. We need to think of how to enlarge their agriculture and produce grain for themselves and export. Rather than each time we seek to import these things from other countries. So when there's a war, you see the opportunity to make sure that you become self-sufficient in those products that you were either to importing. So I think that I don't support all these summits from Russia, African summit, and other summits being called. It's like an attempt to recolonize the continent again. These are my views for now, yes.
All right, thank you so much, Prof. I do hope that our leaders have listened and are listening and will obviously look closely. And as Prof said, I mean, why should one country be ordering a whole continent and then we all go flocking there? It's something we should really look at. Thank you, Prof. Professor of Economics and Public Policy at the University of Uyo, Akwa Ibom State, Professor Akpan Ekpo.
Thank you.
All right, now let's head to the market and see a summary of how we did last week in the different markets. And Will Ibong comes in with the numbers.
Good morning, Ini.
Good morning.
So I came flocking in, as you called, for the market. I come flocking in for this one.
Oh, okay. Interesting. I can see you with your bright colors.
Yeah, I need to be very, very. So the market ended in the Forex, trading in the Forex market was down, as much expected, as Forex reserves also declining week on week. We saw transactions across the FMDQ exchange dropping by 5.2% to close at $397.27 million. And that's due to the drop in the FX spot market. That's the I&E window, 2.93% down to close at. Total transactions there in value was $396 million. We also saw a drop in total derivatives, down 88.59% to $1.27 million. Not a lot going on in this aspect of the market, and we are expecting, investors, what's going on there, especially with the volatility in that space. We're going to be bringing in Odinaka Linus Nwokonkwo, is a fixed income dealer at Access Bank, to give us more insights as to what's happening in the market, how the market performs, especially for the fixed income, and how the volatility in the FX market is affecting trades. Good morning, Odinaka. It's good to have you on the program.
Hi, good morning, Will.
Odinaka, we've seen the Forex reserves are still getting drained amid the volatility in the market. How long do you think this will go on for?
What we've seen is the continued thin debt of funds in the FX market. However, the CBN has been intervening. Last week, at least, we saw about $15 million in the market, and we expect this to continue. When you look at the rate, is still hovering around the 750 to 770 levels. I&E depreciated as at Friday just by 7 naira, closed at 775. So we just expect this to continue. We've not seen any boost in supply yet, but we also expect very much a change in rates.
So if this is going on, what of the exchange traded futures? There's not much going on in that space in terms of future contracts.
Yes, if you can remember the last circular by the CBN, where they said banks will provide the rates, bid and offer rate for the 12-month contracts, while they provide the rate between the 36 and 60 months. However, because of the uncertainty in the FX spot, we've not seen traction. And also, when you look at the long tenor that CBN is quoting, it's kind of investors are looking at it that those rates are quite high. So, which is why we've not seen that traction. So, until the FX spot market settles to comfortable levels and where investors are willing to say, okay, this is where they should trade, then we might see those kind of hedge solutions on the futures market.
Okay, so the fixed income space now, we're seeing muted transactions, a muted close for last week. How do you think, how would you appraise the performance in general?
The fixed income space, when you see what happened last week after the hawkish stance by the central bank, the central bank tightened the asymmetric corridor. between the 100 and 300 basis points, and also increased the MPR rate by 25 bips. That shows a kind of a hockey stance, and what we saw was a huge sell-off, especially on the bond space. We saw almost the 2053, which is the new 30-year on the run board, trading as high as 15%. If you could recall, it closed at the auction at 14.3%. It traded as high as 15%, sorry. So when you look at what is happening on the shorter end, in the treasury bill space, just last auction, we saw offer CBN sold, the DMO sold about 264 billion. And also the suspicion was over 300 billion. We saw rates go as high as 12.15. That's over 600 basis points increase on the 1-year stop rate. So that kind of caused a repricing across the curve, with the long end trading in secondary market at around 10% level. So currently is a bear market. Rates are kind of high. Also the LDR penalty for banks are not helping matters. So if the CBN is expected to debit that today, so we are going to see a very tight liquidity system, which will continue to cause the bearish market to continue.
Okay, so what's the outlook? You've talked about bearish market continuing. Do you think that investors are going to take the bite and probably, with rates probably going to go higher, what do you think will happen to investors' appetite?
So investors will be watching keenly, especially the FPI investors. In as much as they want high rates, they also will be looking at the FX spot markets. So at a comfortable level, and where they feel that they could hedge at very good levels, and also when they see the liquidity, because not just the interest rates, they also want to see that there's liquidity at any point they want to exit. So when all these things come into play, then they are comfortable. They will obviously coming into the market, especially when you look at what is happening in the global market. The Fed's already hiked by 5.25%, and there is a kind of speculation that you might start seeing some easing. Maybe if the target inflation they see, which is where they look at it at 2%, if they kind of achieve that, once those rates start coming down, the desire for high yields will become more very lucrative, and you could see this FPI coming into the emerging market space, and Nigeria is probably one of the possible countries to invest in.
Thank you so much, Odinaka Linus Nwonkwo, Fixed Income Dealer Access Bank, for sharing your perspective on the program. So we'll look at the close for the equities market. We do see that marginal close for the all-share index. It closed up 0.02%. Well, we can take that gain because the market, out of 5 trading sessions, we had 2 positive sessions and 3 negative closes, and that's why we're seeing that marginal close for the week. Still settling at 65,000 points, and market cap is still at the 35 trillion naira mark. We look at the activity chart. However, we saw weaker levels of trading volume and value, except for deals which was oil in the green. Look at the sectors. We did see that uptick for oil and gas. The only gainer for the week, oil, banking, consumer goods, industrial, and insurance were all down, and Seplat contributed much to that. And Seplat was also the one that pulled the market up. So we did see that, positive gain for the market. And the NASD unlisted market also in the green for the week in it. So we're just, looking forward to a great start for Monday and the rest of the week.
Yeah, don't forget the earnings are there. So there's also a motivation for the market. But thank you so much, Will. We'll see you at 1:30 for Business Incorporated. Right, let's head straight to London now, where Juliana is standing by. Juliana, good morning. Good to have you this Monday morning. But kind of conflicting sentiment, I guess, when we hear that the Prime Minister has approved 100 new North Sea oil and gas licenses. And then we also hear that the UK is at the fore of driving the net zero, carbon. So, I memean, it just sounds kind of contradicting, but perhaps you help us to understand more about this.
Good morning, Innie. Yes, you're absolutely right. Slightly contradictory, and that's what activists are saying, particularly those from Just Stop Oil, who have asked the government to stop renewing these oil and gas licenses. Of course, we also heard a pretty frightening statement from the UN Secretary General Antonio Guterres last week, who said, no longer are we talking about the fact that we want to prevent the Earth from temperature rises. We're already there. The world is boiling over. So that's the sentiment across the world at the moment. But that hasn't stopped the British Prime Minister Rishi Sunak from making a whistle-stop tour to Scotland this morning. He's been speaking to the press about the fact that the British government are going to be renewing some oil and gas production licenses in the North Sea. Now, this has been a very contentious subject over the past couple of years, but particularly over the past 12 months. And that's really because of the war that's still raging in Ukraine. I think most governments, especially those on the doorstep of the war in Europe, realise that energy security is a huge deal. Before February 2022, Britain, alongside countries like Germany and France, were importing a significant amount of their domestic gas from Russia. They're not doing that anymore. It hasn't yet gone down to zero, but certainly we are weaning off Russian oil and gas. And Rishi Sunak says, look, we have these commodities available in the North Sea, so it would be ridiculous not to do so. When asked about our plans of becoming a net zero country by 2050, it does appear as if the Prime Minister is backtracking slightly, because he said even if we do get to net zero by 2050, our own calculations do suggest that still 25% of how we live as a society will come from oil and gas, and it's much better, much cleaner to get it from our own doorstep rather than going across the shores. So yeah, pretty controversial, but certainly something that the British government appear to say is for our own security.
Yeah, I guess you have to think of today before tomorrow. But consumer protection, there are now new rules in the financial industry. What's new?
Oh, yes, there are some new laws, actually, that are being unleashed today. This is being overseen by the Financial Conduct Authority, who is the regulator for how basically financial products impact consumers. I think, since the pandemic, there has been lots of confusion and I think a little bit of irritation about the way some financial institutions treat their customers, particularly those who had all of their plans scuppered. Some individuals said, it took them 48 hours to get through to a customer service online. Lots of people not happy with the fact that you can't actually speak to a real person these days. If you have an issue, that you have to go through some sort of artificial intelligence chatbot. The British government have, seen some of these issues as pertinent. So they have tasked the FCA with coming up with some new consumer protection laws, and they're going to be very wide-ranging. So from taking into account how long it takes for you to respond to customers, how you're treating customers, whether or not compensation is going to be applied. So yes, that is going to be rolled out today, which is quite good news for beleaguered consumers. I know we don't have time, but if we do have 30 seconds, it is probably worth mentioning, Innie, where I am today, which is in a central London location, because we do actually have a pretty senior delegation from the judiciary in Nigeria in the United Kingdom for some training. Now, we do have the overseer of the Nigerian Financial Intelligence Unit here. We've also got AMCON, the Asset Management Corporation of Nigeria. They're going to be here for 5 days of pretty intense talks. And of course, anything I am permitted to say on camera, I'll be updating the business team.
Sure. And we could have one of them on Business Incorporated, Juliana. I would trust you to be able to get them out from the training room and come on air.
Absolutely. I'll make sure that we certainly have, if not a soundbite, somebody live with us on Business Incorporated.
Great. Thank you so much. And do take care, Juliana. All right. Now, from there, let's go to the crypto space. I will be on this for the next couple of weeks as Laddie Williams goes on his annual vacation. So we'll do this together. I trust you to be there. And we see the market sentiment. It's neutral. Neutral in red, just at the middle right there. I'll find out some of the things that are moving the market sentiments. If we could see other slides now from the crypto. There you have it. It might be red there for the neutral, but it seems Bitcoin has a lot of green to offer the market at this time at 29,392.30. That means it's up 0.34%. The dominance of Bitcoin is still really high, almost half of the market at 47.6%. Ethereum is, however, in the red, lost some of its money there. Some of its hold, 0.53% is what it lost at 1,865.61 BNB. Let's look closely at the prices at this time. This was this morning at about 8:30 a.m. There you have those numbers you already saw right there. BNB is what we do not have there. It is up 0.49%. Cardano, however, seems to have received some blow as a down 0.96%. XRP, I guess that case in the United States is still a major moving factor for XRP at this time. Let's look at the gainers. There you have it. The gainers are single-digit gainers, even though you have something like complement, at 8.65%. And there, Bitcoin down there, it's 3.93%. Not looking very impressive, not looking very impressive. Let's see the top losers. Hope we don't have double-digit losers there. Unfortunately, we have one of that in double-digit loss there. But, I mean, it's a new week. We know that the issue with SEC is still on, and I think it was on Friday in Nigeria. The government came out to say, that Binance is illegal. I wonder how much that has moved investors in Nigeria. That's, of course, those who are on Binance. You can always use other exchanges to handle that. And we also see that the U.S. Securities and Exchange, SEC, Securities and Exchange Commission, said that they had asked Coinbase to stop trading in all current cryptocurrencies other than Bitcoin prior to suing it. So we're going to have more attention. This obviously hasn't moved Bitcoin that much. We're going to have more attention on Bitcoin. How much impact can this have? We'll see in the coming days, and we'll certainly have conversations on this. But that's where we draw the curtains on the program today. Thank you so much for being a part of this very first episode of Business Morning. This week we have 4 more to go, and it's always going to be fresh. We're going to serve it fresh. Relevant and current business conversation that are just new and relevant current to you. So we'll do it again tomorrow. Willoughby will be here with updates from the world of business on Business Incorporated. I'll see you at 10 p.m. for stock market reports. See what investors will do at the NGX today. Get the summary at 10 p.m. I'm Ini John Mekwa telling you to go out there, make some money, be safe. I'll see you later.